let's bring on our next guest. I see him backstage. Everett Knight, he's the EVP of Corporate Development at the Valens Company. And let's get Everett on the stream. There he is. Hey, what's up?
Hey, Spencer, how's it going?
Doing fantastic. How you doing today? How's your week?
Hey, doing really good. Thanks for having me on today.
Excellent, excellent. I see your slides, guys. Let's get Everett's slides up. And look, I speak and it happens. So, Everett, take us away. The Valens Company. I'm familiar. The people may not be. Tell us about it.
Sure. Everett Knight, Executive Vice President of Corporate Development and Capital Markets for the Valens Company. Anyway, appreciate you guys having on me. The Valens Company, we're the largest product creation and manufacturing company in the cannabis space in Canada. And Spencer, maybe to start off, what I'll do is I'll kind of talk briefly about the cannabis space overall. I'll do this a little differently today, and then I'll tell you more about what we do. There will be forward-looking statements throughout this presentation, so note that. But I'm going to be jumping around. This is a deck on our site that you can check out. But the reason I got into cannabis, my background is in fund management. I ended up launching the first long-only institutional cannabis mandate 8 years ago, and kind of grew up with the space. And I've got to over 200 plus facilities. And the reason, as an investor, I believed in this space was because I haven't seen a space where you have a defined black market already, right? And all we're doing is legalizing that with a double-digit growth rate over time. And you've seen that Canada has now legalized it. You see what the US states have done. And now you're seeing other places around the world like Germany, Mexico, Switzerland, Luxembourg. I think this is just the second inning of the cannabis market overall. And I wanted to put in perspective, for the viewers today on where I see this going, right? And I think that if you look at the cannabis market, it has the potential to be a top four CPG industry. And if you take the US market today, which I think where most of our listeners are, it's a $17 billion legal market in the US today, and it's a $65 billion estimated black market. If you just add those two together with no growth from that, you get an $82 billion industry in the US, which would be fourth overall, right in between tobacco and coffee. Right. So I think, again, puts it in perspective over the long term. I think we have short-term volatility right now as everyone's trying to trade around US legislation with the SAFE Act. I think the long-term fundamentals remain intact. And that's what we're focused on as the Valens Company. So who are we today? Our mission is to bring the benefits of cannabis to the world. And we're doing that through next generation innovative products that you can see on the left and you can see below for some of our brands. Now, skipping ahead, for where we are today is we're focused on narrowing the gap between our competitors. In Canada, we have driven the most amount of revenue per dollar invested than any other of our peers. And we have a high focus on revenue generation and long-term profitability for our shareholders. And I think this chart on the right really shows that and the discipline we've had. And today, what we're trying to do is close the gap and narrow that gap. I don't think we've done a good enough job there. And I think one is drive market share gains and revenue growth. I think you're seeing us take a lot of market share with some of these innovative products that I'll get into later on. And then obviously we've increased our total addressable market, which I'll also touch on. Probably the biggest one on this list for time's sake is NASDAQ. We've said we're going to be on NASDAQ in December, and I'd look out for that here shortly. So with that, kind of on the next slide, where do we operate in the cannabis market? In Canada, we operate what I believe is in the two best segments in the marketplace. We operate in 2.0 products and premium cannabis. And what do I mean by 2.0 products? I mean extract-based products. Think about oil-based products. If you look at the Canadian marketplace, we started only with 10% extract-based products back in 2019. It's now 30% of the market. It's the fastest growing area, as you can see. And when we look at more sophisticated, mature US states like California, Colorado, and other markets around the US, it's usually a 50-50 split between extract-based products and overall dried cannabis. Now, where we think that's going long-term is we believe that 75% of the market will be extract-based products. And the reason we believe that at Valens is, one, I've never met a doctor that wants you to smoke cannabis. They want you to consume it in different ways. And two, When you look at, Thanksgiving, for example, and are you going to roll a joint at the dinner table with your family and light it? No, you're gonna take a cannabis infused beverage and cheers someone, right? You're gonna take edibles and pass them around, or conveniently take a vape out of your pocket and sip on it. And that's really the basis of our company. And we're really positioned for the future in that growth in the Canadian market with the most sophisticated manufacturing base in that marketplace. And then the second area we focus on is premium cannabis. Now, in Canada, if you've been following it, it's very difficult to brand because of the consumer package regulations. But what has a brand today is genetics and high quality cannabis. We acquired a company called Citizen Stash, and they're one of the leaders and have a cult following from consumers in this area. And if you look at this chart, this is the other highest growth engine of the cannabis space today in Canada. If you look at it, 14% of the market is premium cannabis today. In California, it's 31%. And if you look at it, those two segments, we believe these are the two highest growth segments in the Canadian marketplace, where you have an oversupply of dried cannabis on the low quality end, where we do not play. We believe we've actually pivoted to the two best areas. And if you were going to create a cannabis company in the Canadian market and believe in these two areas of growth, there's no better company for an investment opportunity than us. I'm going to skip some of the Canadian market opportunities here just to kind of show you. I think you guys all know the growth of the marketplace and the overall addressable market. But maybe quickly, just to show our business model, we have both our own branded B2C side of the business, which is on the right-hand side, as well as we do a B2B side of the business where we're helping customers and other LPs in Canada actually manufacture their goods. We have a sophisticated manufacturing base where a lot of even the big players can't make a lot of the products we're making. So what we're doing is increasing the utilization of our facilities and helping up. We started in this industry to be an ally for both customers and consumers, and we have a lot of innovations to go around for both. The reason this is unique is really because the Canadian marketplace and how it played out. I think it's a competitive advantage for us. And what we're doing is we're following in the footsteps of some of the giants, right? And this B2B and B2C business model, it's been done by Constellation, Pfizer, Jameson, Maple Leaf, etc. I always like to use the analogies of, as you look at Jameson Wellness, you see some of their products that they make for themselves branded on the left-hand side of the shelf. And on the right-hand side, you see the products that they make for their competitors. And that's just like us in the Canadian marketplace today. These are some of our formats. If you're in Canada, I encourage you to try them. We've been a lot of firsts. We were one of the first one with a 1 gram vape in the marketplace. We were, one of the first with live resin pens, which I think is the future of the vape pen market. And we were first with a lot of the edibles market, whether it's chocolate covered gummies, baked goods, or even THC beverages in the Canadian marketplace. So we have a lot of first and innovation that you can see on the slide. This is a unique slide that I wanted to go over before we get into questions. If you look at this, we really have what we view as the highest value add part. I don't know if you guys can still hear me here. I just got anyway. I don't know what happened. There was a little bit of a glitch, but if you look at this slide, Valens in the value chain.
Yeah,
Spencer,
Everett, you're all good. Just so you know, you're all good.
Okay, perfect.
Yeah.
I was just gonna keep going for
Yep.
Sorry about that. But if you look at the value chain here, we view ourselves as operating in the highest part of the value chain, where you actually get the best kind of return for your customers. If you look at cultivation in Canada, we still have double the amount of cultivation than demand for canopy. And then we have outdoor coming online. We overbuilt it in Canada. We're buying biomass today in Canada for lower cost than a lot of these producers can grow it for, which is a good input kind of generator for margin for us. We extract that, purify it, formulate it, and then put some of that innovation around that product set into our branded products, and then actually distribute those into the provincial governments today. We've really been in a launch, grow, optimize mode. For those of you that know us early on, we were B2B primarily, and what we were doing is more on the extraction side. Manufacturing was always a part of this business plan. And what we've done is accelerated that growth. We really transitioned to that manufacturing side. And what you've seen us do in the last year in 2021 is really increase our B2C part of our business, our branded products ourselves, to have more control on the consistency. What we found in the Canadian marketplace was that a lot of our customers, we wanted to be ally, and they're great companies. However, some of them, small and mid-tier guys, could not meet the consistent targets that they were going to meet. So to help with the consistency of our platform, we launched our own brand, and we think it's in the best ROI of our shareholders to actually go down that road. So we've been in a launch mode for the last kind of 6 to 9 months of launching products, and we've been launching products into a global supply chain pandemic. So what we've been doing is really having to pay shipping costs and air freight of 200-300% to get packaging in. We haven't got a lot of the automation equipment in. But what you really see in that as an investor coming into the name, you're going to see that benefit in 2022 as the 6-month wait times in some of these automated equipment, or a lot of the kind of the margin profiles that we're paying for air freight will slowly go away. And it's a great exercise for us to really make sure that we can find different distribution channels and different suppliers to make sure that goes away. And again, in the growth stage, which we're entering in 2022, I think you see a lot of the benefits on the margin. This is just to show you where we've been. I think this is anyone that wants to invest in us. We were the largest kind of extraction company. If you look at 72% of our revenue came from toll processing and co-packing in 2019, showing the extraction. We accelerated our push to manufacturing in 2020. Our manufacturing facility was going to come online in Q4. And what we did is during COVID, a lot of our customers went bankrupt and had problems meeting demand for the extraction side. So what we did is pivoted a little quicker. I think it was one of the most successful pivots in the Canadian marketplace. And then if you look at 2021, this is really a story of us increasing, the consistency, and we have all this innovation. Why don't we launch our own brand? But you're seeing the differentiation now between our B2C side, which is now almost 50% of our overall revenue. I think you see that continue to grow. We acquired a company called Citizen Stash subsequent to the quarter. And what you see there is my expectation for this next year is to be around 75% B2C, our own product brands. So I'm going to touch on some of our IP, and then what I'll do is I'll try to conclude here quicker, and then I'll leave it for some questions. IP is very important to the marketplace, and if you're a new consumer, we've invested a lot of money in this. I've looked at over 120 different emulsion technologies. Sourced by Valens, emulsion is by far the best, especially if you rate them on these 6 criteria, which we do. So if you look at oil today, cannabis oil floats to the top of water. Any oil does. This emulsion technology makes it completely water compatible. The difference of this versus others is that it's consistent with every sip. So the first sip is the exact same dose as the last sip. And we have shelf stability studies that have actually been over 2 years that actually show that. So you can take it home, put it in the shelf, and it'll still be good later. And we can really customize the smell and taste. The problem with cannabis infused beverages today is that it tastes horrible. Right? You see that cannabis taste. We can really mask that taste profile. And that's why we have 9% beverage market share today and growing in the Canadian marketplace. Now, onset and offset. Now, onset in the marketplace, if you and I had a cannabis infused beverage on this call, we'd have to wait for 30 minutes to 2 hours to feel the high of that one beverage. And that one beverage would last for, call it 4 to 8 hours. Right? So a long period of time. This emulsion technology speeds that onset up to 5 to 15 minutes. You feel it right away, and it starts to go away in kind of 45 minutes to 2 hours. And what does that remind you of? It reminds you of beer, and beer is sold in 6-packs for a reason. It's because it's social. It's sessionable, and this is really bridging the gap for cannabis. This is a small part of the market today, but look for it to grow in the future. We also have one of the largest US CBD companies today called Green Roads. This is a company that has over 30,000 5-star reviews and obviously some of the highest ratings on trust of the product. The unique thing about the CBD industry, I think it's one of the best industries longer term for health and wellness across the world. And this company, what it has is a trust that is higher than anyone else. And I don't know. It just paused for me, Spencer. My apologies, but
I don't know, man. Glitch in the matrix, but we got you back.
all right. Well, good. Well, I'll kind of I'll finish this next few slides,
Yeah.
of Spencer, and I'll switch over to questions here. I would say that if you look at this Green Roads brand in general, you can actually scan the QR code, and you can get the certificate of analysis from the actual product, that shows you the actual test results of where it came from, that they're verified. The trust with this brand is really what makes it go to the next level. And this is a company that I think you should keep an eye on in the marketplace, that is just in the beginning innings, but already a top 10 brand in that market. I'll just touch on one more of our parts.
Go ahead.
Stashes are kind of our overall premium cannabis brand. If you look at this brand today, they actually use a craft growing part of the market, where they're really a genetics company. And what they do is much like other CPG companies do. And I think this is the future of growing cannabis, where if you look at Driscoll, and you've had Driscoll raspberries and strawberries, what Driscoll does is actually they have the genetics, and they supply it to all the farmers. The farmers grow the actual strawberries and raspberries, and they come in and pick the best products. So it's a quality specific. They say, oh, you have a good crop, we're only going to take 30% here, 70% of this one. And what it does is maintain that quality of cannabis. This is much like California market today. Citizen Stash is 6 to 10 contract growers that does the same thing. They have a cult following. Again, the number one selling brand above $12 per gram in Canadian market. And this is an acquisition we closed just a few months ago, but something to keep an eye on. I think there's plenty of synergies there. From this acquisition. Obviously, want to take that premium brand that they have in dried cannabis and pre-rolls, and we're going to take it into vapes and concentrates. So maybe with that, maybe with time, I'll just touch on kind of the Canadian recreational market. We're the fastest growing company when it comes to provincial listings. That with the government, without provincial listings, you can't get actual sales revenue. What this does is basically, I think it's a 6-month forward indicator of kind of getting products to the shelves. For us, we've been the fastest grower in that because of some of the innovation that we have. And you're seeing those products take off and continue to take off. And that's what we're focused on, is bringing innovative products really to the consumer, and focus on them and what they want. So with this, I'll finish off in this slide and open up for questions. But if you look at us today, we traded a significant discount to our cannabis peer group. What you see is you see us turn around the business in Q3 2020 to Q3 2021 on the right-hand side. And what it has is it has more incremental revenue growth. I think as we take a step forward and get all three cylinders of our business firing on all aspects, and around this turnaround, which I think we're in a pivotal point to do, I think you see an acceleration of that revenue growth, and you see that in the analyst numbers below on what they're forecasting for implied revenue growth. So, we're currently trading at 1.5 times analyst revenue next year. They're forecasting us to grow over 100% of that revenue going into the year, which is not only higher than our peer group, but trades at a significant discount. And with this NASDAQ listing, what we're focused on is really kind of narrowing that gap, which we should see a listing here in December, as well as kind of focusing on the business. I think market share growth will determine it all, and the innovation on the product. And during the volatility in this marketplace, that's where our head is. Their head is down, working on the business, and I think you're going to be excited for some of the products coming out in the new year. So with that, Spencer, maybe I'll open up for some questions.
All right, Everett, thanks a lot. I don't see any. There's one that's been bugging me really since you brought it up, is on the beverage side. What is the most difficult thing? Is it the taste profile, or is there something else?
It's the taste profile. Like if you look at the IP in the beverage market, we've seen a whole bunch of companies figure out a few of those criteria that I brought up there, Spencer, and whether it's fast onset, whether it's they can make it compatible. But I'd say the two biggest ones are probably smell and taste, which a lot of the Canadian Beverages, if you taste them in the market, taste like cannabis. I think that can't happen long term, especially as you look at these CPG companies, as well as offset, right? So offset of a beverage as well. Like, you don't want to be high. You want to be able to drive home. You want to be able to plan your day. You want that sessionability and have multiple. So I'd say smell and taste as well as offset are probably the most important too. And that's, I would say, the biggest differentiator with Sourced by Valens technology. And, I think it's we haven't been able to make a lot of the POs on the beverage side, and we already have 9% market share out of our small facility. We have our bigger facility that just came online, and I think you're going to see growth in that number because of that.
All right. Everett Knight, EVP of Corporate Development and Capital Markets at the Valens Company. Everett, thanks a lot, man.